Welcome to the Modern Real Estate Investor Podcast, where we interview the biggest and most successful real estate entrepreneurs, investors, and capital raisers in the world to provide you with the tool sets, the mindsets, and the skill sets to help you conquer yourself, your life, your marriage, and use real estate as your wealth creation vehicle so that you can live a more successful, happy, and fulfilled life of growth and contribution. If what you're after is having it all, if what you desire is becoming the best version you can be across all areas, mentally, physically, emotionally, spiritually, sentimentally, and financially, you've come to the right place. We will bring to you the best of the best real estate entrepreneurs who will give you the insights, knowledge, experience, and skills so that you can go out and crush it financially and across all areas of your life. Grab pencil and paper, sit back, enjoy, and you are welcome to the Modern Real Estate Investor Podcast. So we develop properties that inspire people to develop themselves across all areas. So basically apartment buildings built to rent. So we have one project going on, and we own some land that we are thinking of some land that we're going to use to develop projects on. And so we have that, right? That's what we're going to focus. And we do have one hotel development. It's going to be, well, it may not be our last one, but that's not our main focus. But we are developing a hotel. So yeah, that's what we're doing, man.
Exciting. That's great.
Awesome. So I clicked record. I didn't even realize it, but I can just get started with my normal introduction, man, and we can jam for a bit.
Sounds great.
So, hello, Modern Kings and Queens. Welcome to another episode of the Modern Real Estate Investor Podcast, where we interview some of the best and most successful real estate investors from around the world to provide you with the tool sets, the mindsets, and the skill sets for you to conquer yourself, your life, your marriage, and use real estate as your wealth creation vehicle so that you can achieve your financial freedom and have a more successful, happy, and fulfilled life of growth and contribution. So I'm super excited today. I have with me a very successful modern king who has been crushing it in the real estate, in the commercial real estate investing field. And I'm super excited to get to talk to him, learn from him, and network with him. His name is Brian. How do you say your last name, man?
Wagers.
Brian Wagers, and he's a multifamily investor with both hands-on and hands-off experience. And he grew his personal portfolio to 100 units and his family's portfolio to 500 units before moving into syndication, where he now has been involved in over $400 million worth of apartment transactions and over 5,000 units through his experience as an owner and general partner. He now seeks to invest and help other high growth professionals and business owners put their money as a tax advantage, risk adjusted growth space that is multifamily. So super excited to have you in today, Brian. Thank you very much for your time, man. And you're welcome to the show.
Yeah, thanks, Alex. Thanks for having me on. Excited to talk to you today.
Awesome, man. So the first thing that I do with my guest, Brian, is I ask them to walk us through their real estate investing journey in 75 seconds or less.
Yeah, so I got started in real estate as a need. So fresh out of college, I went into the sales industry, uncapped commission. I started doing really well there. I was a top performer in sales, and I started to have an income problem. So I was stashing a bunch of money in my Roth IRA, and I decided that I needed to do something outside of just stocks and 401k investing. So I bought a single family property. That was the easiest thing that I knew how to do and figure out how to do. Had that rented out very quickly, but it was just going to be way too slow. So I pivoted from that first single family into a 12 unit. And then from that 12 unit, I then bought another 22 units, ended up doing some seller financing, bought another 20 unit, then bought another 12 unit, then bought a 59 unit, then an 82 unit, 40 unit, 14 unit, 12 unit, another 50 unit. And I was building up these small, medium-sized portfolio where I was the only partner. I had about 100 doors where I had no partners, no investors on. And then I started partnering up with my family. More specifically, my father-in-law. At the time, it was just my girlfriend's dad, but now he's my father-in-law. And we bought about 500 units together that I mentioned. And I started to run out of doors in my market, and I knew I had to go into different commercial real estate or continue into multifamily and team up with other operators and go into different markets. So I started raising capital actually for a group in Dallas, Elevate Commercial Investment Group, and raised capital for them on a couple of deals, 400 unit in Houston, 150 unit in Dallas, 200 unit in Columbia, South Carolina. It's just kind of one-offs, and that relationship went really well. And I ended up becoming a partner there at Elevate instead of just, a capital raiser for them. And
Mm-hmm.
now we're approaching 5,000 doors under ownership right now between us. So I'm one of the principals there. My two partners are in Dallas. We've got a team of 5. And then we also have a construction company too that part owner in. So
Yeah. Hello, morning kings and queens. At my company, Millionaire Network Automation, we believe in the power of networking. We believe that in real estate, your net worth is your network. This is why we help real estate investors raise capital by connecting them with their ideal investors and helping them build a massive network of their ideal investors in less than 30 days and with only 4 hours of work per week. If you're interested in this, click the link below in the description of this podcast to learn how you can propel your growth with a reliable system that will consistently help you connect with your ideal investors, build trust, add value, get your investors to promote you and put you in front of more of their investor friends, and raise more capital faster and in a much more effortless way so that you can achieve your financial freedom and still have the time and the energy to pour into every single other area of your life. So go watch the training, and you're going to have the opportunity to book a call to talk about how you can get this 100% done for you system implemented in the next 5 days. So thank you for watching, and I'll see you later, and enjoy the rest of this episode. Bye-bye.
that is and 75. I don't know if I hit the 75 seconds, but that's my quick journey there.
But you crushed it, man, and it sounds like it's been exciting, right? And so how long has all of this, and how much time has all of this happened?
Yeah, so I got started. So I graduated college, went straight into sales. So I put my head down for 3 years in sales, and
Mm.
to become a top producer at the sales company. And then about 6 years ago was that first single family. A little over 6 years ago was that first single family door, and I've been in multifamily for about 5 years, a little over 5 years now.
Okay, so what did you sell, man? And then there's like a trend here, right? So first of all, you went to college. That's an achievement in it of itself, right? And you
Mhm.
made it through. And then you went to sales. And then not only did you made it through sales, but you became a top performer. And then you went to the real estate investing. And now not only are you making it through, but you're fucking crushing it, right? You like I'm aware with Elevate, and I follow your partner. What's his name?
Georgia
His
Brew.
name? Yeah, I actually had him on the podcast a couple of I think last week, or actually I don't know if we rescheduled. Yeah, I think we rescheduled, man. But I'm not sure. But I either had him or have him. I'm not sure. I've been walking all day and I'm kind of confused. But so I know that you're crushing it, and there's this trend, right, of you crushing it, right? And I want to talk about the traits and the disciplines and the habits that are needed to be able to do that kind of stuff, that kind of work, those kinds of achievements. But before I go into that, what did you sell?
Yeah, I think you mentioned it there. Discipline is big, but transportation services. So when I graduated from college, I wanted to be a personal financial advisor. I thought if I could help others make money, I would be able to figure out a way to make money as well. And no one would hire me. I wanted to be, I interviewed for Morgan Stanley, Northwestern Mutual, a lot of these, financial companies. They said I was too young, didn't have a Rolodex. But one of my friends said, "Hey, I know some guys over here at trucking transportation company that they're killing it. They're making 6 figures. They've been working there for a couple of years." So I was like, okay, I'll go try that. 6 figures in a couple of years, you got me. I'll go ahead and try it. So I said it was uncapped commission. Starting salary was $35,000, which was not much, but I was thinking at the time too, right before that, I was going to go to law school and I was going to pay $35,000 a year to eventually make 6 figures. So I figured these
Yeah.
guys are going to pay me $35,000 a year to learn how to make 6 figures, and I'll give it a shot. And I said, okay, I'm just going to, it's not a glamorous, it's a trucking industry, kind of rough around the edges, nothing, sexy about that. But I saw the numbers and I was like, okay, I'll put my head down and I'll try this for a year, and I'm going to give it my all for a year and see where I'm at. And a year came around and I was starting to have some good success. They hired me an assistant to continue to grow my book of business. And then at that point I was like, okay, I'll give it 3 years. And then at 3 years, I had really built up a book of business, had my own customers, and I had a couple of assistants at that point. And that's when I was maxing out my Roth IRA account. And I was like, okay, I need to do something besides just stash this in 401k.
You got yourself an income problem, you said, right?
Yeah, exactly. And
so how does an income problem look like, man?
And I think I became an accredited investor. So I was, well into six figures after 3 years there. Pretty close to accredited investor at the time. And so I started putting, I saw most wealth created in the US was either the stock markets or real estate. And at the time I saw stock market as like the quick and easy fix. I thought, okay, I see these guys online, they're day trading, they're making a bunch of money. Like this seems really cool. So I put a bunch of money in some pharmaceutical companies, and then I put a bunch of money on GoPro. Pharmaceutical company did okay. GoPro went from $35 a share to $5 a share.
Damn.
They didn't invest. They decided not to invest in the drone industry or something like that, and their stock tanked. And I'm sitting here watching the stock like go down, like I have some sort of control of it. Like I was spending so much just watching it, and it was like I have no control. I'm spending just as much time on this as something I would be actively doing. So I was like, okay, I've cut my losses here on the stocks. Let me look at the other wealth creator, that is real estate. And so I did what a lot of people did, the Bigger Pocket School of Education, listen to every single podcast on there, read all the books, and I could understand that was like an easy thing for me to grasp at the time, single family. So I had $25,000 saved at the time, which was a lot of money to me at the time. And I figured, okay, I can buy, about $100,000 house. So I started looking for notifications for anything under $100,000, and I started making offers on these houses, and finally got one for $90,000. The rent, the mortgage was $450. I had it rented out for $950. The guy paid me Venmo first of the month. Really nice guy, really good tenant. There was no like horror stories. It wasn't like, broken bathroom at 2 a.m. It was just, it was going to be way too. I was a couple months in and I was like, okay, I've got this accomplished, but this is going to be way too, what am I going to buy a house a year for 10 years and be somewhat okay? Maybe have $10,000 a month or $5,000 a month, or what was that end route? And that was just going to be too slow. So everybody in commercial real estate, the common thread, that I was listening to was, I wish I would have got started in commercial real estate earlier. Everyone was
sooner,
like,
yeah.
I wish I would have got started earlier. So I was like, okay, let's go into commercial real estate. And and one of the other principles I learned was, don't get the shiny penny syndrome. Like, don't just see, there's tons of ways to make money in real estate. And I knew I had to figure out what, like, niche down to one avenue. And that for me, I understood the economics of rental property investing. I understood the commercial real estate scalability. So I decided, okay, I'm going to use multifamily as my avenue to really start building here and using teamwork. And so then I zoned in on multifamily. And then again, it was a comfort level. So I realized, these 12 unit, I'm going to go for these smaller multifamily, something that I could wrap my head around. I felt more comfortable, for the 12 unit. It was my first 12 unit was $500,000. And I figured, $125,000 was the total equity needed for it. So I felt more comfortable, figuring out how I could find 125,000 than, now our last raise on our last deal was $30 million, which would have been totally different then. So, that's when I realized, okay, I'm going to start doing the multifamily, and I got that 12 unit, and that gave me even more confidence. And that's when I started knocking out those small, medium-sized multifamily apartments.
Yeah, and you started building your own personal and family portfolio, right?
Yeah.
You did a bunch of deals. Did you do all of those deals with like your own personal, what's the word that I'm looking for? Like by yourself, or did you go into a coaching program or had a mentor?
Yeah. So for me, that's exactly where it was. It was building the track record. I wanted to start building a track record before I started, getting other investors involved and kind of building this proof of concept. but I did have my first, mentor was Michael Blanc. He's in the apartment space, and it wasn't really a mentorship. I paid for his apartment buying course.
Mm.
Eventually I did buy his mentorship, and I bought another. I spent, past couple of years, I spent tens of thousands of dollars on mentorship still to this day, different coaches along the way. But for Michael, it was just an apartment buying course that kind of helped me navigate the apartment terms, navigated what I would say to lenders, what I would say to brokers, and I read every single book I could on multifamily. I've read 10 or 12 books on that. And paired with that, I had a lot of confidence, talking. And then once I got those 12 units, felt really comfortable. And yes, so about 100 of those units, I was the only partner. I didn't have any investors on. And then about 500 of those units, I was the I was the quote unquote, general active partner. And then my father-in-law was the investor on those. So I had to prove the concept first on those 100 units. So it was
For sure.
a mix of selling that single family unit, my savings, and then I did a bunch of seller financing deals. And then I actually refinanced my first 24 units into more multifamily. So I was able to really scale up, build equity that way, through the seller financing. And then he saw what I was doing, refinancing, having this proof of concept. So then he wanted to start getting involved. And then from there, I started running out of these small, medium-sized doors. And that's when went into these larger ones.
Nice. Yeah. So he saw that. Oh, like this. Brian is actually knows what he's doing, right? So then he was confident enough to invest in you in the deals that you're doing. So so the first 100 and some units, did you find that you told me you did seller financing? Okay, cool.
Some of the deals, yeah, I did do seller financing. One of them I did a promissory note, and two of them I did seller financing. One of them I actually refinanced out of my first 12 unit into another 12 unit. So I pulled out enough equity in that 12 unit to go buy another 12 unit.
So man, could you like throw some of the books that you read? You mentioned 12 books. Could you give us, the audience, some of those books so that they have, because a lot of people don't have 3,000, 10,000, 20,000, 30,000 for a mastermind or a coaching program or whatever, right? But I have a feeling that some of those books that you read might have given you some strategies, the confidence, the strategies or skills or knowledge to feel confident enough to actually execute, right? So could you throw some books that might be a good idea for people to get their hands on?
Yeah, I actually just did a post about this too, or I have it queued up. Multifamily Millions by David Lindahl. That's a great one. The Hands Off Investor by Brian Burke. That's a really good one. Capital Raising for Real Estate by Hunter Thompson. That's a great one. Best Ever Apartment Syndication Book by Joe Fairless is a great one. Michael Blanc has his own one. Buying and Selling Apartments. That's a book. I don't remember the name of the author on that one, but those are all some great ones to get you started.
Awesome. So man, so before, so I know that your like superpower is capital raising, right? And I really want to go deep into that, into like how you do it and all of that. But before, I want to talk about the traits behind a successful capital raiser, right? Which are also the traits of someone who goes to college and completes college, and someone who goes into sales and not only completes sales but crushes it in sales, and someone who goes into capital raising and real estate investing and crushes it there as well. So what are some of the traits, habits, that you have to be able to accomplish everything that we've been talking about, man?
Yeah, I feel like a good salesperson has a really good product to sell, and real estate investing, specifically multifamily investing, I think is a great vehicle to sell. If someone is high net worth, they need to be investing in real estate, like as a vehicle. And so sales is super important. No matter if you're an accountant, you're selling yourself to get the job. If you're actually in sales to promote yourself, sales is one of the most important skills I hope to teach my newborn son one day. And the sales aspect is, you're not really selling anybody anything. You're trying to figure out a way to help them. And so I think getting behind that is a really good skill to have. Figuring out how you can help the person on the other end of the phone or other end of the person's hand you're shaking, not just thinking of it as how am I going to come out of this situation on top. So that's one. Having thick skin is important in life in general. You're going to get told no, you're going to get told to F off. Like, when I
Yeah.
was making cold calls, people would tell me, screw off or whatever. But, the worst thing that could happen is someone tell me no. And the best thing that could happen is I create a relationship or a business partnership that could change both of our lives. So I went in with the mindset of, no is just, no is going to do nothing, besides just get me closer to a yes. So having thick skin is super important. Staying disciplined is very important. Having good habits, having good routines. Saying no is important too. When you're young like yourself, a lot of people when they're first coming up, you have a lot more distractions. I think once you get a family, you obviously have that. But as someone young, your friends might want to be partying every night or partying often, or they're thinking short term versus long term. Start having that long term vision young is super important. That goes into that delayed gratification. Same thing with fitness, same thing with business. You're delaying your gratification. You're not cashing in right away. Same thing, like when I was building up my real estate portfolio, I mean, I had 7-figure net worth and I still had a 10-year-old car with no AC in it. And all that money, I was reinvesting it back into myself, reinvesting it back into investing. So living below my means has been helpful. And you mentioned it right when we started getting on the phone, staying positive. That's one of the biggest things, whether you believe in manifesting or not, like having a positive mindset is really like can get you through the bad days, because every day is not going to be, you're not going to get, 100 sales every day. Some days you might have 0 sales. Some days you might have a bunch, but staying positive and having those goals will really carry you through the tough times. So those would be the
Yeah.
traits I would say.
Yeah, those were great, man. And especially I think that one of the biggest hacks to starting to become a man that thinks long term and make more money and is focused on building rather than like hustling and stuff like that is just having a family, man. Right? So I'm married. I have a daughter. And the distractions thing, and even though I'm young, the distractions thing doesn't really apply to me. Like there's nothing that I do in my life that detracts or subtracts from where I'm going, right? Like everything, how I sleep, how I eat, the way that I treat my family, how I work, everything is literally optimized to push me forward and to help me move closer towards my goals. So, but yeah, and I think that's one of the biggest hacks, just having a family. And you don't want to go out and just get married and have a family just because. No, of course not, right? But in my experience, it's been great. Like it's been one of the best things that's ever happened to me. One, because I love myself and I love my family, and two, because like business wise, it keeps you focused and it keeps you centered and it keeps you with a strong why, right? And I know I think you can relate to this now more, even more now that you have your newborn baby, right? You're probably trying to build something great for them. Tell me about that, man.
Yeah, I think strong why is what gets you through those situations, and like makes you go the extra mile, makes you go the extra rep, makes you have the extra call, makes you put in the extra work. And for sure, a family is everything. I have a 3-month-old son, but even before I even met my wife, I had this vision, that when I have my I want to be looking at my grandkid, and I just have a 3-month-old now. I'm having this vision before I even was dating anyone. I had this vision of having a grandkid and showing him like everything that you're seeing that's around you. You have this because I put in the work so you can reap the benefits of this. So
Mm,
I was thinking super long term, like even grandkids before I even had one, my kid. So just being able to say, this is what I built and this is what you're going to continue to build, not, oh yeah, I was playing on my phone or I was just shooting the shit or just running around town. Like now you can kind of scrape by, or you got to create your own. I want to be able to look at him and be like, or her, and just say, this is what hard work can build. and show them. And hopefully that lasts, you know, multi-generational, not, not second generation, third generation, keep that going where my kids, my kids keeps that going. And I want to, really continue that legacy.
So you've been thinking like this even before you had any like a girlfriend, right? Even before you had a kid, you're thinking about your grandson, and you're thinking about the kids of your kids of your kids of your kids and stuff like that. So who instilled this mindset in you and this kind of perspective and long term vision, man? Who instilled that in you? Was it like personal development, or was it your parents, or were you just like born like that?
I think it's a combination. I think it's a combination, not one source. I was raised by a single mom, but, my dad he was in the military. He was traveling in the military. A lot of people think I was like former military or anything like that, but my dad was. But, when it was just from me growing up, it was just me and my mom. And my mom worked hard. She had her own business. She worked for other companies. I saw how hard she worked to really provide for me. She put me in one of the smallest houses, but in the best neighborhoods for a school district. So worked, long hours there. And, I don't think I realized it at the time, but looking back, I do now see how hard she worked. And, I didn't realize I was in the smallest house, but I did know that I was in one of the best school districts and I got a really good education, public school education that thought they were private school. And then my dad being in the military, I saw the discipline that he had, even though he wasn't around as much. He was traveling for the military. My mom's dad had a heating and air conditioning company, that created wealth for his family, and he had that for 45 years. And I saw him build that from scratch. It wasn't like, multi-million dollar company, but it was a successful company, and upper middle class he was. And I think I saw that. And then I got super into personal development early on, probably in college too, reading every, the Brian Tracy's, the Zig Ziglars, the Dale Carnegies,
Nice.
being really engulfed in that. And I think I had these at the time. I didn't really know I had these influences around. Like I just looked at them as family, but looking back, I can see that, I had this pretty good sphere of influences around me. And I saw that. I think that was super helpful growing up, and then always wanting more. I always wanted to have more. I
Mm,
saw my family, somewhat create that, and I think that was super important for me.
awesome. So a combination of being born with it, combination of having positive influences in your life, your mother, your father, your grandpa, I think you said, right?
That's right. Yeah.
And then personal development. So awesome. So it's a combination of all of those three. That's really interesting. So Brian, let's shift gears for a little bit, and let's talk about how you there at Elevate's Commercial Investment Group, you have the logo behind you.
Yeah.
How Let's talk about the fact that you have over $500 million under management, and that's just under management. That's cool, right? To use the B word, that's crazy, man. Um, and that you've raised, well, I don't know if you personally, right, but like you as a firm have raised over $120 million. Um, and your superpower is capital raising. So let's talk about that, man. And tell me, so you already told us how you were able to become a partner in this company by providing value to them, and the value that you brought was capital raising. So, um, has capital raising been like, was it easy for you? Did it just come to you, like talking to people, networking, capital raising, or how did you go about it? How were you able to raise capital for this company and become their partner?
Yeah, and to start that, yeah, Elevate's raised over 100 million in capital. I've probably been involved around 50 million in capital, or more raised, and I think it became, that's not what I intentionally came out. But if you look back at my past, I think it kind of adds up. I wanted to be a personal financial advisor fresh out of college.
Mm,
Helping people grow their portfolio, helping people build wealth, because I always saw, those people are making money too. But for me, it was a natural progression with what I was doing in real estate. It wasn't like I didn't set out to just be a capital raiser when I started buying single family and multifamily. I set out to be a real estate investor. And then
mm-hmm.
it just kind of evolved and pivoted. I pivoted into real estate. And then from real estate, I pivoted into multifamily. And then from multifamily, I pivoted into these larger multifamilies. And I went from being an operator, managing property management, setting up insurance, setting up legal, setting up construction management, setting up lending and bank debt, to just hyper focus again. I focused on multifamily, and then within multifamily, I started to hyper focus on the capital raising side. And I liked it. It was a natural progression for me. I liked talking to other investors. Like you, I liked talking to other people on how they built their wealth, like how they became who they are, and how they're super successful. And that's essentially what I'm doing as a capital raiser. How a lot of the people that I'm working with are either high level executives, or a lot of them are business owners. So it's interesting to hear different people talk about their businesses, or even doctors and dentists that I help to. For me, it's truly, I enjoy doing it. I like talking to these people about how they grew their wealth, and then talking to them about how to diversify their portfolio, and how they can grow their money in real estate, and how they can protect themselves investing in multifamily as a limited partner, and how they can get the tax advantages. So for me, it was, just kind of a natural progression and a pivot, you could say.
Yeah. Yeah. So that progression seems very interesting, man. So, I want to ask you then, um, just so like real estate investing, it involves a bunch of different things, right? Like finding deals, analyzing the deals, operating the deals, underwriting the deals, and then capital raising, right? And more. But those are like the five main components. So would it be safe to say that like your sole number one focus is like capital raising? Is that like your one thing?
100%. Yeah. I'm a partner at Elevate, so I'm invested in the success of the company. So every now and then I may do a little bit here and there, help with a debt conversation, or look at the underwriting, which I've done before, or talk to a property manager here in town on some assets we have. But
Mm-hmm.
my one thing is the capital raising. So that's whether it's our own investors, other people that are bringing us their investors, or institutional partners where they're writing large checks. So that's my main focus at Elevate. Yeah.
Awesome. And then I would imagine that like other partners in the company are focused on their own one thing, right? On either like finding deals or just analyzing and like whatever they're good at. Is that right?
That's right. So we have a director of acquisitions. We used to be a commercial loan underwriter at Merchants Bank. So he finds our deals and he underwrites our deals. He's got
Okay.
experience in that out of bank. We have Joel, who's our asset manager. He built out the property management company for 10 years, and we brought him on to to oversee all our uh,
Nice.
assets. And then above him is Eric, one of the co-founders, our COO. He's chief operating officer. So he's overseeing Joel. He's very heavy in the weeds and seeing over property management, making sure asset management is doing what they need to do. And then George, the CEO, he's more of the visionary. He does a little bit of everything. He obviously has the construction background, so he helps on the construction side of things. But really the visionary, networking, helping us kind of do a little bit of everything.
That's incredible, man. So, um, it's really just like cool to see the dynamics. And then you want to know what I found really interesting? I find really interesting the fact that you like the company Elevate Commercial Investment Group. You're literally implementing the who not how principle like at its best, right? So, for example, having the your partner that you just mentioned that actually manages the properties, right? He spent 10 years building that company, and instead of like just hiring someone who could possibly be like someone who could manage properties, you brought someone in who had spent 10 years building a management company, and then you just brought him in. That's literally the definition of hiring a who, not a how, right? So I find that really interesting and really powerful, and it's really awesome. And so what I'm curious about, man, is how does the day of someone focused solely on capital raising looks like?
Looks right here, what you're looking at right here, sitting in this desk, on the call, on the phone with investors, a lot of emails. Actually, I probably send 100 emails a day back and forth, answering investors' questions, looking at new deals, sending new deals to investors, managing in those. And then every now and then I go to our like last week, I was just in South Dakota looking at a new property. When we're getting a new property under contract, I like to go out there, even though I'm not as involved on the asset management side. I like to go get a feel and touch the property, walk the property with Eric or George. That way I can report back to my investors and tell them what I saw, what I
Nice.
liked about the property, what I liked about the market that we're investing in. So I will go to different properties. Tomorrow or Wednesday, I'm meeting with one of our institutional partners at our investment here in town, our 376 unit here in Centerton. And then on Thursday, I'll actually be going to our 350 unit in Houston, and we're doing an investor tour there where we invited all our investors to come check out the asset that they invested in. So that's something we started doing, is inviting our investors to go walk the properties as well. Just, you can't really do that with the stocks, so we feel like it's a nice thing
Yeah.
for investors to come out and see the improvements we've made. So I'll do that every now and then, go check out the properties. I'll try to network and go to some real estate events as well. I guess, yeah, so that's mostly my day as a real estate investor. I wake up at 4 a.m. every day. I'm in, now that I have the home that I have, I built a home gym in
Awesome.
our set. We have this house has what you call an in-law suite. So it's a 2-story house in the back. It's like a quasi pool house in-law suite. So I turned that into a full-on gym. So I'm out there first thing in the morning, getting my day started that way. Trying to get a strength training in, maybe some cardio. I've put a sauna and a cold plunge out there. So I've been doing
That's great.
cold plunge every day now. Don't have time to do the sauna every day, but yeah, that's a big part of my daily routine as well.
Me too, man. At my house, I have a big trash can, and I just have like a big, how do you call it? Cooler, maybe you call it.
Yeah.
I'm Mexican, so I sometimes like struggle with my words. But yeah, like a big cooler, and I have a bunch of ice in there, and then I just put ice in my trash can that is filled up with water, and I go in. It's awesome. And then having an in-home gym, man, one of the best things that you can do. So I used to, it used to take me 15 minutes to go to the gym. So it would take me 50 minutes to go to the gym, then 50 minutes back, 30 minutes, and then I don't know, 50 minutes that I'm like getting to the car, getting ready and all of that. Like 45 minutes, right? Every time I went to the gym. And then I used to go to the gym 6 days per week. That was like more than 3 hours per week. That was like 5 hours per week. And then there's 52 weeks in a year. So it came down to, by making like a $3,000 investment in having an in-home gym, man, I was able to buy myself about 38-hour work days, like a month, which is crazy.
Yeah, it's huge. It's a time. I mean, as your net worth increases and as your time per hour increases, the time value of money becomes more and more important. Once you look at things in the perspective of what can I make per hour? And that's this whole thing about the who, not how you were speaking on is, once you get to a certain like hourly, what you're expecting your time is worth, then you
Mm-hmm.
delegate that out, or you find ways to shrink that time, or find ways to add it. Then it's a huge value. Mowing the lawn. I'm going to hire that out at $40 or $45, or now it costs a little bit more because we have more lawn to mow. But at the beginning, it was like, okay, if I can pay someone $30 or $40 to mow my lawn, that's an hour or two of my time that I have back. And unless you truly enjoy mowing your lawn, but the same principle of being able to hire that out, I think it can go a long way. And people that are in the extreme high net worth realize that time value of money is huge.
Yeah. Yeah. So yeah, and you can do with your time a lot more than the money that you're giving out to people so that they can do the stuff for you, right?
Exactly.
So man, most of the people that listen to this podcast are people who are either active investors or they're passive. Some of them are passive. Most of them are on the active side, right? Aspiring to become real estate investors. Either way, like the people who listen to this podcast are people who have chosen to use real estate as their wealth creation vehicle, man. So what are some things that you would like to tell them?
Yeah, I would say, for those active investors and passive investors, I would try to focus, on your one or two things that you're really good at, and try to really dial in on that. Real estate, there's a ton of different ways to make money in real estate. I would try to pick one or two vehicles to do that within. And then once you master one, then maybe add a second one. For me, when I went into sales, if I would have tried to master sales and started building my real estate company, I probably wouldn't have built my sales company, or, I
Yeah.
wouldn't have had as much success in sales. I would have had two part-time gigs. So I would really try to master one thing at a time.
So
Uh,
don't get the shiny penny syndrome, or how did you call it at the beginning?
that's right. That's exactly shiny penny syndrome. You see a
Yeah.
shiny penny and you go grab it, or, a squirrel, like just going after everything. So I think that was super important for me. And I think that is important for investing too. You know, investing, you do want to diversify a little bit. My net worth is probably 80% multifamily, but I'm not saying don't invest, don't open a 401k, or don't open a Roth IRA. I think it's okay to have some level of diversification. I still put a little bit of money every 2 weeks into Bitcoin and Ethereum every 2 weeks. If that goes to zero, I'll be fine. It's a very small percent of my
Yeah.
net worth, but also it could, go up a little bit. And I like to hedge my portfolio with a little bit of diversification. So I think having that perspective, always trying to improve, always trying to be the best version of yourself, obviously is super important. And that'll go a long way in investing and building your business, building your real estate company, and being positive and seeing that long-term growth, and knowing that results don't come right away. When you're investing, we're in a 5-year business plan. I'm not expecting to double or triple my money in a year or two. Maybe
Tomorrow.
yeah, maybe that does happen. We have doubled investors' money in a year or 3 years, but going in with that 5-year vision of knowing that that's what's going to take. Same thing with business, like building a company. Like if you sacrifice 3 to 5 years of really a lot of hard work, and you can really build something super strong. And for me, that's been super tremendous in my development and business. And as those 3 to 5 years, as my income increases, I'm not increasing my lifestyle expenses every time my income increases. I try to delay that. So, maybe I increase my lifestyle a little bit every 5 years, or every 10 years, but not every year. So then I can reinvest in myself and reinvest in my business.
Yeah. Yeah, man. It sounds like you're really financially disciplined. So that's, like, just props to you, man. Um that's what it takes, right? Most of the time entrepreneurs, when they start having success, they are, buying Lambos and experiences and stuff like that. But it sounds like you may be too, but not so much, right? Like, you're disciplined and you're smart about it. So I really like that. So what about for the passive investors, man? Anyone who might be thinking of the way that they're going to use to get into real estate might be on the passive side. Then eventually, as they learn a little bit, they're going to become active. So what would you tell them, right? And maybe you can talk about some of the things that you got going on.
Yeah. So, I mean, I think passive investing is in multifamily is the best way to create wealth. Every deal that I do, I invest as a limited partner as well. So all my deals are usually like $100,000 minimums. I'm putting at least $100,000 in every single one of my deals as a limited partner, just not as a general partner, but in the same share class as my investors. So that's what I want to eventually be, is full-time passive investor. So I see
Nice.
all my investments through the eyes of an investor. And I would make sure when you're investing, you look at the sponsors. Who are you investing with? That's a uh, huge point. What market are they investing in? Make sure that they're investing in markets that you agree with and understand. What asset class are they investing in? Make sure you understand that. How has the asset performed the past 12 months? And then how does the sponsor project the asset to perform after they take over? Where are they adding value? How are those assumptions? So I think if you're looking at from that point of view, you can have a lot of good success. So the sponsor, the market, the asset class, how it's performed in the past, and how they expect it to perform in the future is really going to set yourself up for success. And having that as an eye of optimism, but also, being questioned, try to ask questions, and try to understand underwriting a little bit.
So what are some of the deals that you're working on right now? If you can talk about them.
Yeah. Right now we're finishing up the watercolors, which was a 376 unit A-class deal. We bought that directly from developer. And what
Nice.
we're
Directly from the developer? So they
directly
developed it
from,
and they sold it entirely to you?
that's right.
That's crazy, man.
Yeah.
That's awesome.
So that's kind of a target of ours right now. Off market deal. So we're just about finished on the raise right now. So by the time this airs, that one's probably going to be fully committed. After that, right now we're working on a ground up development deal, 236 units in Northwest Arkansas as well. We have another deal in South Dakota that we may be rolling out that will also be a class deal. So excited for that. That's kind of our target is, we're built for C class. That's what we got started in. We have a construction company, but we found that the A class properties perform the best in our portfolio, and we found a true value in when we can buy directly from the developer, where they're builders, they're not necessarily operators like us, so we can go
Yeah.
in there, increase efficiencies, push market rents. The past property we built 100 carports, so we're adding $100 a car on that. We're building garages and storage units on these facilities. We're putting smart packages on them. So we're finding other areas where we can add income as well as pushing rents above what they were trying to just get people in the door. So we're going after that. We're looking at high growth, business friendly markets. I'm not investing in California. I'm not investing in the Northeast. I'm investing in Texas, Arkansas, Florida, South Carolina, South Dakota, some Midwest states and areas. But within that, in the multifamily space. So it depends when this comes out, what we'll have, but that's kind of a general target for us. I'm trying to double my investors' return in a 5-year period or less. That's for me, that's my goal. When I'm looking at investment, how can I double their initial investment within 5 years?
Hmm. Nice. So, man, this is really interesting for me, like having you buying from directly from the developers. Um, so like the developer uh built the entire property using like the money from the bank and some money that they raised, and then I imagine they have to make a profit. So like they actually sell the property to you at a profit, right? Or how does that work, man?
Yeah, they're making money. They're buying their land at a good basis. They're buying. They have their cost of building. So we've bought from developers at 90% lease up, where they built it and then they've leased it up, where they're just trying to get people in the door. We bought
Hmm.
it from developers where as soon as they complete the construction, then we buy from them. We're also partnering with developers where we're partnering from the ground up. So we're getting involved, helping them
Fund the deal and everything.
fund the deal and then also operate the deal after they get it to the point where we can get residents in there. So we like
Uh-huh.
the new build. A reason for that is because we like the newer product and the A-class product that is being built. So we get
Yeah.
pretty flexible with that
So
when we're
you're looking to hold.
yeah, we look for a 5-year hold or less. There's one deal that we're looking at right now that might be a 7-year term, but most of our terms are 5 years.
Nice.
But
All
historically,
right.
we've exited deals in 3 years or less. But real estate has been really good the past, 10 years or so, and real estate's going to be good the next 100 years. But if you want to look at a deal conservatively, you want to look at it in a 5-year window. For us, I think that accounts for different market cycles and positioning yourself for success.
Awesome. So, Brian, I have a couple of questions that I finished my interviews with. The first one is, what would you say is like a positive mindset or belief to have in order to be a successful capital raiser?
That you're helping the other person on the other end. I kind of talked about it a little bit in different roundabout way, but positive mindset is you're offering this investor an opportunity. This isn't you selling them anything. You're literally helping them out. You're helping them place this into a vehicle where they're putting their money in the S&P 500 or index funds, and they're getting 6 to 8% annually. Sometimes it goes down, sometimes it goes up. You're giving them a good wealth vehicle. You're providing them a service. So going into that mindset where you're helping them out, and maybe you have to educate them on why that is the case, and maybe they don't understand it and maybe they're confused, and that's okay. But the mindset is that you're helping the other person out.
Hmm. Okay. Yeah, that's great insight. And very important to have, right? Like because if you go in thinking or with the mindset that you're selling people or you're taking their money, it's never gonna work, right? Because like nobody deep in there, like nobody wants to do that, right? Like, but if you reframe it towards and think that you're helping them, is gonna be a lot better for sure. So the next question is, what is a limiting belief that maybe you've encountered yourself that you think held you back a little bit from raising capital, as in the best way that you could have? And what did you do to get rid of it and or get over it? I mean,
Yeah, I think, just putting yourself out there might be a limit. Like you're going to get rejected, or you're going to like get a lot of no's, or, these people they're going to not take you seriously. I think just not being afraid to put yourself out there. And a lot of times the people that you think have a lot of money, they may not be able to invest. They're spending money on their lifestyle. They're spending money on their material things. And the people that you didn't think might not have been invest, sometimes those are the ones that end
mm,
up investing, and they have the money. So I think just not being afraid to reach out to, as many people as you can, talk about what you're doing, be more vocal about it, you know, take a picture of what you're doing, like be more vocal about what you're doing and be more present, and talk to people about what you do. Don't be afraid to talk to whoever about, the projects you're working on. Get good at your elevator pitch. When someone asks you, what do you do, start, getting good at that, and striking up conversations with people. I think is super important.
awesome. The last question, Brian, is what is a successful networking strategy or strategy to build relationships? Because we I think we mentioned it a couple of times here on this podcast. Relationships and networking is key to like be able to be successful in real estate investing, right? And finding deals, finding partners, raising capital, and all of that. So, what is a successful strategy to network and build relationships?
Yeah, I think getting like kind of what I talked about right there is like nailing your elevator pitch. You can look up what an elevator pitch is, but that's pretty much who you are and what you're doing. So where you can talk about that clearly and concisely in like 30 seconds or less, and then getting in the right rooms. Making sure you're going to hang out where people of high net worth are. Go to real estate meetups. Sometimes real estate meetups, there's a lot of single family real estate investors, but you have to weed through the different networking and different events to find out which ones are good. So don't be afraid to go to different ones. And when you're going there, don't go in the back of the room. Go shake your hand and go introduce yourself to people and see what they're there for. Hey, like ask them why they're there. What are they trying to get out of it? And then
Yeah.
you can connect from there.
Yeah, maybe you can help them, they can help you, or make some connections. Awesome. So Brian, I've really enjoyed this chat with you. I've gotten a lot of value. I bet that people listening got a lot of value as well. So if people want to learn more about you, they just want to connect with you, whether that's to like learn about how to do real estate investing actively, or maybe some passive investor opportunities. They just want to connect with you. Where would be the best place for them to do that, Brian?
Yeah, Brian Wagers on Instagram, on LinkedIn. You can find me there, or Facebook. I'm on all the social medias that you use. I've got links in my bios, all there. So
Awesome. Well, Brian, it was a pleasure talking to you, man. We'll have the links to all of your bio and the website of Elevate, wherever this podcast appears, so that people can connect with you and reach out for some opportunities. And it was a pleasure, all right, having you. Thank you very much. Do you have any words that you may want to share?
yeah, I think we hit a lot, man. I think it was a really good podcast, and I appreciate you having me on here. So definitely don't be afraid to reach out to me. And yeah, sounds great.
Awesome. Bye-bye, man. Thank you.
Thanks, Alex.
Thank you for listening to the Modern Real Estate Investor Podcast. We want you to know that we love and appreciate you, and we are super grateful about being part of your journey of becoming a successful real estate entrepreneur and having it all. Please share this episode with a friend who you think will be impacted positively. Send it to someone who you know is interested in real estate and dreams of having it all and being the best they can be across all areas. And if you thought this episode was really valuable, share it on your social media as a post or a story. We have a special gift for all of those who contribute to the Modern Kings and Queens movement. So for those of you who decided to share this episode and help us spread our message, send me a message letting me know on any social media platform at Alex Ramirez, the Modern King. I have a special surprise for you. Thank you for watching, and I'll see you later.